Many of you have this question, which is the best time frame to use when you're trading boom and crash? Well, the answer to that differs from person to person, right? So, but let me just give you a few pointers, a few ways that you can see which time frame is best for you to use, right? So, if so, let's start by what? By account size, right? So, if you got a small account, it's very better if you use the smaller time frames. Why do you have to use the smaller time frames for you to for you to be able to what to make profits when you're trading, right? So let's take this for example over here. Let's go to the 1 hour time frame first, and as for let's take this for example over here. Let's say we mark this resistance over here with the box, right? So let's just say we marked what this flip zone over here, right? Since we are in a what in a downtrend, this support here, when it gets broken, right, it becomes what resistance, right? So let's say you have got a small account and you want to enter over here when the market pulls back over here, right? As you can see, right, let me just zoom in a little bit further, right? As you can see, the market first gave us what a doji, so like a slow down in momentum, trying to show us that it will respect. So if you had entered over here after this, so like small doji over here, as you can see, this spike over here, it would have blown your account, right? If you have got a small account, right? So larger time frames are just for those with larger equities, right? So let's shift down to the 15-minute time frame and let's see what happened over here, right? So larger time frames are for those with bigger accounts, with larger accounts, and small accounts. It's better if you stick to the 5-minute time frame for your entries and the 15-minute time frame for your analysis, right? So 5-minute time frame works better. If you can even use the 1 minute time frame, it will be better. But I don't encourage people to analyze and you're using the 1 minute time frame. The 5-minute time frame is better. It's the best actually for me. Even if you are using a large account, the 5 minute just works best. It just works magic, right? Right over here, right? So this was the spike that would have blown you over here. Is this the spike? Yeah. This was the point that we had marked over here. And this over here would have blown you out. This was what would have blown your account. Right, so if you shift down to the 5-minute time frame, let's just mark this zone over here. Right, so I've got this zone over here. Right, so let's shift down to the 5-minute time frame. Right, so it's actually this zone over here. If you've got what, if you had gone back to the 5-minute time frame, you would have seen that this is actually what an uptrend, right? It's continuously creating a series of what of higher highs, higher low, higher high, higher low, higher high, higher low, right? So you wouldn't have entered here. This was the spec that would have blown you. But if you're using the 5-minute time frame, you've seen that it's still in an uptrend, right? So if you are using this, if you've got a small account, it's better if you just stick with the 5-minute time frame for your analysis, right? 15-minute time frame, 5-minute time frame for your analysis and your entries, right? Don't use the larger time frame. And then let's go to which type of trader you are, right? So if you're a scalper again, it's better for you to stick to the 5-minute time frame or the 15-minute time frame. Let's just use this moving average. Yeah, let's use this moving average as for entries, right? So let's assume that you are entering using what or using this 50 moving average. Whenever the market pulls back to the 50 moving average, you will be taking our entries, right? So as you can see, this is the 5-minute time frame, right? So for this uptrend alone over here, let's see how many entries you got, right? So I've got 1, 2, this would be a future stop loss, 3, 4, 5, right? And this doesn't touch, right? So if you that's for the what for the 5-minute time frame, right? So if you're a scalper, you're just entering for a little while, and as you can see, you've got about 5, 6 entries already in this move alone, right? So let's shift to the 1 hour time frame and see if you're a scalper, would you have been able to enter, right? If you're a scalper, as you can see, you haven't even had a chance to enter yet. And as you can see, let's see for this downtrend even, as you can see, it went down for even quite a long time, right? And you only got what 1 entry, 2 entries over here, right? So I prefer that you use the 15-minute time frame. As you can see, let's see, just first see for the 15-minute time frame again, you got 1 entry over here, right? That's the only clear entry, right? But for the downtrend, you'd have had some more entries, right? So the best time frame again goes to the 5-minute time frame for this, right? That's why I just love the 5-minute time frame. It gives me chances to enter many times, right? So that's why we enter using the 5-minute time frame. We've got many chances to enter using using the 5-minute time frame, right? So as for me, I overall would choose to take my entries using the 5-minute time frame because it's actually better for me, right? Then for the stop loss, right? Stop loss also goes along with with the count size is just the same thing, right? So overall, I would say the 5 minute time frame wins this race. Especially if you are trading boom and crash. I've tested many strategies and I know why I'm telling you this. It's better if you use the 5 minute time frame for your entries, right? You can analyze on the 1 hour time frame. There's nothing wrong with analyzing on the 1 hour time frame. You can check your trend on the 1 hour time frame, but when you're entering, I encourage you to use the 5 minute time frame unless you've got any other strategies. But if you're using the strategies that I post on my channel, the 5 minute time frame is the best that you can use. You get multiple entries. It's actually the best.